Question number 104. It is related to lease accounting. Let's see what is the ask of this question. It says, what amount will appear under non-current liabilities in respect of this lease? So we need to tell non-current liability. All right. On which date? On non-current liability as at 31st December 2016. All right, we will keep this thing in mind while reading this question. Now let's read the question and gather the relevant facts. So on 1st January 16, Fellini Company entered into a contract for the right to use a machine for a 4-year period. So right to use asset, and looks like it's a lease, and then the mm, lease period, or we can type it here. The lease period is 4 years. The contract meets the definition of a lease, all right, under IFRS 16 leases. Fellini Company paid a deposit of 700,000. So deposit, this was 4 years. Deposit was paid of 700,000, all right, on the commencement of the lease on 1st January 16. So on this day only, deposit was paid. Okay. And a further three installments of 700,000 are payable annually in installments. Okay, so then you will have your first installment, then you will have your second installment, then you will have your third installment, and the installments will be of 700,000 each. Are payable annually in advance, means the beginning of the year it will be paid. So it will be paid on 17, this will be paid on 18, this will be paid on 19. The present value of the future lease payments. How much is our future lease payment? Deposit is not part of our future lease payments. It is already paid on the beginning of the year. So the future lease payment is this 20,000, three future payments, but its present value of future lease payments. This is 1871100. All right. The interest rate implicit in the lease is 6%. So we have the interest rate of 6%. All right. So what is the current liability and what is the non-current liability? The ask at this question is, what is the non-current liability? So non-current liability is the liability you know that we will settle beyond 12-month period. So first we need to see how much is our total liability. Total liability. So we have this present value. We'll calculate the interest. So it is 112,266 plus how much? Yeah. So the total liability will be 1871 plus this interest. So this will be our total liability. This will be the interest for the first year. And out of this, we are going to pay 700. So total we need to pay 1983366, considering the present value and the interest thereon for the first year. Uh, Out of this, we will pay 700,000. I mean, the first installment within 12 months, like right the next day after the books close. So we are telling this on 31st December 16 and 1st of January 17, we will pay 700,000. So this will be our current liability because we are going to pay it within 12 months, you know. And then the remaining will be our non-current liability because this we will pay after 12 months. So we will deduct this 90 from 1983. We will deduct the 700,000 that we are going to pay within 12 months, and then this. So this should be our answer 1283366, which we will pay after 12 months.